All right, let's bring in Caroline Woods and let's talk some earnings. We already have some out this week, and we're going to hit two of them that on the surface seem very different, SoFi and McDonald's, but there might be a student loan working at McDonald's joke in here. I'm not going to make it, though, Caroline, because that wouldn't be very nice, and it's Monday. SoFi's up 10% right now. Let's start there.
Yeah, SoFi poised to be a big winner today, as you said, up about 10% after a top and bottom line beat. SoFi also gave a pretty upbeat forecast, and the resumption of student loan payments definitely helping to drive these earnings and the stock higher today. In terms of the actual numbers, posted a narrower than expected loss of 3 cents per share. The expectations were for a loss of 7 cents per share. Revenue, meanwhile, rose to $530.7 million. The expectation was for $516 million, so big beat there. Student loan originations climbed 101% to $919 million,
wow.
Thanks, of course, to the resumption of student loan repayments. Personal loan originations jumped 38% from a year before to $3.9 billion. And then home loan originations were up 64% year over year to $355.7 million, despite what the company called a continued challenging rate environment for both purchase and refi. Now, in terms of that upbeat outlook that I mentioned, SoFi said it's confident in achieving GAAP positive net income in the fourth quarter of 2023. And then for the full year, said it expects revenue of $2.05 to $2.07 billion. Now, that's higher than its previous forecast of about $1.97 to $2.03 billion. So also above what Wall Street was expecting. So raising its revenue forecast and beating Wall Street's estimates, now forecasting $386 to $396 million in full-year adjusted EBITDA, up from an earlier forecast that called for $333 million to $343 million in adjusted EBITDA. So taking a look, shares actually adding to those gains in the first few minutes of trading, now up more than 12% in the first, call it 3 minutes of trading, now up almost 70% year to date. So a stock that's seen a really impressive move. Keep in mind, back in November of 2021, this was a stock that was trading at $22 a share above that level. Now it's trading at $7.75, but an impressive move nonetheless.
Yeah, definitely holding its own here. Trading pretty uniquely to itself, too. I don't see it looking like a lot out there. Maybe like a general kind of like a cloud growth tech chart. It kind of looks like a little bit, which would make sense, but looking pretty good here. I mean, 10%. And then headline from BlackRock about securitizing personal loans. Always interesting when you have big financial partnerships. So I think the market probably likes that, too. Flipping it over to McDonald's a little bit. This one, I'm kind of surprised we're not getting a little bit more movement out of this, given the last 2 months as McDonald's got trapped by, I think, to some degree, the Ozempic, not ever going to eat sweets or anything that's not perfectly healthy for us anymore. I would think that there'd be a little bit more drama around this report, given how much those shares pulled back.
Yeah, it's interesting. Unlike SoFi, which is adding to its gains in the first few minutes of trading, we're actually seeing McDonald's, which was up about 2% at the open, now only up about 0.1%. Okay, call it 0.4% now. So it's sort of bouncing around. This is despite a beat on both the top and bottom line as well. EPS of $3.19 easily topped analysts' expectations of $3 per share. Revenue actually grew 14% to $6.69 billion. The expectation was for $6.57 billion. Overall, same-store sales rose almost 9%. U.S. same-store sales rose more than expected thanks to strategic menu price increases. So those came in above 8% growth. The expectation was for 7.5% growth. In a statement, the CEO said the macroeconomic environment is unfolding in line with our expectations for the year, and we continued to deliver convenience and value for our customers. And then on the earnings call, The CFO did note that the challenging macro dynamics continued this quarter and that consumer spending does remain pressured. So this obviously gives us a good, insight into the consumer and, amidst higher prices. Speaking of inflation, they did say that they're not seeing any changes in terms of customer acceptance on pricing, but they do expect those inflationary headwinds to continue in the fourth quarter, so just at a little bit of a slower pace. So they didn't exactly say how much they raised their menu prices, but it definitely helped the top line here in the U.S. They also noted notable strength in countries like Germany, the U.K., Canada, and did note some macroeconomic pressures in China as well. So it's interesting. Now we're seeing shares, back up about, you can see 0.6 or 0.8%. So this is going to be an interesting one. Could be a boost to the Dow today, might not be. Still negative year to date, down about 2%. And the earnings call was still going on when I came down, but I was waiting to see, about commentary about weight loss drugs. Haven't quite seen anything yet, but I have to do a keyword search once again because it's been a few minutes.
Yeah, it's like when they have comps at up 9% around the globe, it doesn't seem like they need to be too worried about the weight loss drugs, but the market, I don't know, maybe it's got other ideas, because it's not like staples as a category don't have a reason to look appealing. The broad market just got hit. Tech got crushed on earnings. This is a time when there is potential for these types of companies to rally. So that's the only answer I've got right now. And the earnings look okay. The backdrop is favorable to the sector, but nobody wants to touch Mickey D's right now, and a lot of other companies in the category. Thanks, Caroline, joining us from the New York Stock Exchange.